Yeah, yeah. What? You lost music? Oh, no. Hey, man, I'm just making coffee. We're almost there. How come it didn't play new stuff? All right, let me make a coffee and then we'll do our PCE. G'day, mate. How are ya? How's your mama? Morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Yeah, planning our trades in advance. Because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus in the long term, never risk money you cannot afford to lose. Hey. The camera's a little off. Can we do that one? Hey! Yeah. I think maybe I'll adjust that. Is it the camera or is it the monitor? See, I can raise and lower my monitor. Oh, about with a finger. No, that's a little better, huh? Is that all right? Yeah, all right, cool. So we got PCE today. It's a biggie. It's a doozy. It's going to move the markets. We're going to have some high vol. Extra vol, I would say, today. So anyways, we'll do that together. We'll see what happens. I'll try to describe PCE, real PCE, core PCE, PCE deflator. You're going to be sick of PCE when you're done with me. And while you're here, click on the little thumbs up button. Huh? In the description below, you'll see lots of links. Lots of links. These are resources available to you. Tradersway.com is a trustworthy and ethical foreign exchange broker that won't trade against you. Investor Bootcamp has training, live and video training, starting at just $88 a year. Incredible. You want something for free? How about a 90-minute lecture on trading stocks? You want something for free? How about feedback on your technical planning, your technical analysis? Would you like some feedback? Yeah. It's free. Would you like a free lecture on fundamental analysis? That's free. How about a book? It's not my book. I wrote the book. I'm the author, but I sold that to Wiley Publishing. So you can buy the book on Amazon.com. And there's lots of free stuff over at the FX Bootcamp YouTube channel. Cool. Here's Trader's Way. Yeah, awesome. ECN, that means they don't trade against you. And I'm doing a party. Would you like to come to my party? Highlander, you coming to the party? It's not far from you. Thanks, Jimmy. Cool. Hey, come to the party. Everybody come to the party. Let's have some dinner. We'll have cocktails. We'll have a 4-course gourmet meal. It's indoors, even though it looks like an outdoor building. That's an indoor building. See the beautiful, warm, tropical plants? Yet there's Christmas decorations. Yeah. So it's warm. It's tropical. It's southern themed. We're going to have a beautiful gourmet dinner. And then we're going to have cocktails over here by the library. See the Christmas decorations? Yeah, it's warm and tropical. Very cool. So I hope you guys attend. We're going to have dinner together. It's going to be a small group. It's going to be great. 2 weeks away. All right, so let's talk about PCE. I got too many windows open on my other screen. No. Okay, let me. I'm going to close that, and 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 I guess I'm going to close that. So I might as well just close that. Okay, I closed all those. I'll close the party window. I thought I had one other thing I wanted to review. Just looking for windows to close. We got too much research going on. The yield on the 10-year Japanese government bond, we'll close that. I guess I was doing the PCE. So let's talk about PCE. PCE is similar to CPI. It's a different basket. It's a more dynamic basket. It updates more quickly. It's more sensitive to reality. It's just a better measure than CPI, and that's why the Fed uses it. Okay? So it's very similar to CPI, but then you want to do real. And what is real? It's inflation-adjusted PCE. So you look at nominal, okay, and then you subtract inflation, and you get real, okay? This is different from core. Core is nominal minus food and energy. So you have core. So now we'll do core, which is nominal minus of energy and food. I guess I should do it this way. That's core. Okay, so that core number, nominal is the headline number. Then we'll get core. You want to pay attention to that. That's nominal inflation minus the things that the Fed can't control. Then we're going to do real, which is nominal minus the inflation rate. And then we have something with the deflator. And I was trying to explain this, this sort of process. And I mix these ones up. It's been a long time since I've done these calculations, but is it nominal over real? Does anyone remember? Is it nominal PCE over real PCE times 100? Is that it? Does anybody recall? If it's not that, it's the other way around, real over nominal. I think it's nominal, so the headline number, divided by real, which is, right, the other way you could do it is nominal minus inflation, okay? You divide them, and then you multiply by 100. Can anybody confirm or deny that? So that's the three numbers and how they're calculated. Okay, above and beyond just nominal. Okay. Now, people are going to extrapolate from any one of these and say, see, the Fed's going to cut. Or they're going to say, see, the Fed's not going to cut. Or they're going to say, see, the Fed is going to pause. Or they're going to say, see, the Fed is going to raise interest rates. So be careful. We're going to get lots of volatility today. I'm going to move my scalp to break even. This was me scalping earlier. I scalped the pound yen short. And then if I show you out here, okay, that's all I did. I teach this every day, so. Yeah. So we'll see. We'll see. The other one is up here. Okay, this was obviously a sell. This was obviously a sell. I just threw one down there just for, I don't know. I don't know why. Habit. So PCE, what do you guys think is going to be? Let's check the poll. Let's see if we have enough. Yeah, we do have enough. Thank you. Last chance to do the poll. And thank you very much for being here this morning. This is an important event. And I love that we have such a great community. So thank you for being part of it. Just last chance for us to fill out this form. What do you think PCE is going to be? It's a split decision, so last chance. Boom. All right, we're done. Thank you very much. Split decision. Most people think as expected. Well, a couple of things. Okay, a couple of things. CPI is down. And did you see CPI in Europe today? What was it, 2.4? So it's low. And that's not because things are getting better. And remember, in my swing trading group, which is the swing traders and the day traders, we meet on Tuesday and we actually do the work. And I can tell you, yes, inflation is very low now in Europe, and it's very deceiving. The only thing that has low prices in Europe is energy, NRG, okay? The only thing down is oil and base effects. So if oil's come down a little bit, or let's say a lot, and has pulled inflation down somewhat. But compared to high inflation a year ago, which was more supply chain related, supply chain's been fixed, had nothing to do with the ECB or monetary policy. And now oil's come down, which has nothing to do with the ECB or monetary policy. So you get the base effects with oil, and now it looks like inflation's really low. The problem is I don't believe it. I think it's a mathematical anomaly. Okay? So, you see? But anyways, all those pressures exist. Those are their numbers. They're not lying. That is the math. It's just maybe the wrong math to be focused on. And it looks like everything's working. Everything the ECB has been doing is working. Everything that the Fed is doing is working. That's what it looks like. It's not necessarily true. So for today, though, I would probably lean on that camp. Oil prices are going to be measured down because remember, it's not measuring now, it's measuring the past. And there's going to be base effects where last year we had 7% and 6% inflation. And now it looks like we have lower inflation compared to that before. It's dramatically lower. So if I'm going to say either, I'm really going to go with it'll be a little bit lower than expected and may continue one more month. But I have a feeling we're going to run out of base effects, and I've been telling you to be prepared for oil to go up, and it's been going up now. I've told you to be prepared for this, and I said when oil goes up, it's going to pull all that inflation back up. PCE will stop falling. CPI will stop falling. And without the base effect, there's nothing to pull it down, so it actually might go up dramatically, and therefore the Fed will not cut. The Fed will not cut, not based on economics, but the way the statistics are gathered and reported. So next year, it'll look like inflation's going up, which also isn't quite accurately true. Energy would be going up, and everything else has actually not been coming down. It's kind of a trick, huh? Interesting. Yeah. So very, very, very cool. Get ready for the vol, though. People are going to overreact, and some people are going to go for profit taking. Some people are going to trade the vol and do some scalps. Others might see it as an opportunity to get back in. And we are in this situation where, like looking at this pound yen on an hourly, for many, the long-term trade that they've been waiting for in their planning process was, this is obviously a take profit. Obviously, that's why I have it on my chart. So everybody that uses this tool knows exactly what it means, and therefore it's obvious. And then the next thing for a bull, because that's bull, that's a bullish trade. You're like, but Wayne, it's down. No, it's not. That's bulls taking profit, putting fuel in the Lambo. That's not a new trade coming in. That's an old trade coming out. And this is what is unseen, that there are bullish orders in here somewhere. And so it came down. And then PCE, if it's lower than expected, Oscar Mike on the move. Okay? If it's not perceived as a good number, this could be the top. This is the end. My only friend, the end. I'll never trade pound yen again. Yeah. So anyways, so I'm double dared short on this. So maybe that'll happen. And if so, payday. Oh, snap. But I'm actually not that bullish on the pound. That's why I'm short. I'd rather be bullish on the euro. And, well, we're at interesting prices. Okay. If it turns bullish in here, I have permission to engage as a bull. But the problem is I don't like the technicals. You lost me on the lower low. Okay. And like I said before, this is where bulls are supposed to take profit. And if you didn't do the first one, you should have got out on the second one. And now we've dropped very significantly. And, well, yeah. So now the big question, and we don't know the answer yet, but is this the December move? Or is it going to be one of these types of Decembers? Well, you need to make your decisions. We're about 7 minutes to CPI. You guys excited? Did I say CPI? Sorry. PCE. Yeah. I have a meeting scheduled for tomorrow with a crew that can put together a calendar with spike analysis so that we could go through the calendar now and I can show you how much PCE is likely to move the markets in the next hour or two. That's pretty cool, huh? Yeah. Not just the calendar. And the other thing actually I like about their calendar is that you can just click a little button on the calendar and remind me. Like you can schedule it. So you can go through the calendar, let's say a week in advance, find out the 3 or 4 things that you actually want to trade because they have the best, let's say, volatility and you want to scalp the news. Great. So you go through the calendar, you find those opportunities, and then you just click, boom, and add it to your calendar. Schedules it on your Google Calendar or something, you know? And I'm like, oh, that's actually really nice. I could actually use that. That's actually really neat. And, you know, and you get a little message, a little reminder, pa-ching, oh, in 15 minutes, there's that Aussie jobs report you want to trade. And you're like, oh, snap, I totally forgot. So you turn the Call of Duty off and you go do your duty. And not that duty, but your job. Consumption investment, cool. Yeah, I guess there's no impact, Richard, on government spending, really. Not in the short run. In the long run, maybe. So are you doing G&I as well as GDP? Okay, so let's go over to the euro. Have I told you you're my euro? Okay. Oh, those are the stock markets. Sorry. That's why it's hard for me to find. Can't get it out of my head. So funny, I was watching the Thanksgiving parade in the morning of Thanksgiving, and they're like, and then on this float there's Belle Biv DeVoe. I'm like, yo, Slick, blow! They're on the Thanksgiving Day parade, which is cool. They're great singers. But I tell my wife, do you think they're going to play You Can't Trust a Big Butt and a Smile on the float music? Oh, it's so funny. Gross domestic income. Oh, okay, that's interesting. gross national income is more. But anyways, cool. So we're just about 4 minutes out. We got our euro. So what do we have? Let's get rid of this because I don't want to overemphasize, but because we're going to trade vol, it's not really a swing. So what is important in the moment? Well, we've topped out. We've done the trade for the week. So the swing has been done for a couple of days. And that always leads you to a counter trend. Does anybody here know the target of a counter trend weekly swing trade? You got to be quick. We only got 3 minutes. Central pivot. Thank you, Santiago. So that means when you hit here and it's early in the week, it's expected to come back here. Cool. Nice. So the bullish trade worked, the counter trend trade worked. The thing is, are we going to do this today? So that's why I'm measuring the lowest low to the highest high and find out that my Wayne and Nachi tool, has found the bottom. And what we're trying to decide today is, will the news break us above the 21 EMA and provide us a higher low, higher high into the next target? And the next target for this is actually, based on this low here, is actually 110.33. Okay. But the real potential is that it sets up an out of position bullish trade for euro dollar going into December, which would then lead us to a quick up and a disastrous end to December. But at least by then, I know to take profit up there. You don't have to tell me twice. I already know. Yo, slick, blow. All right, news coming out, news coming out, news coming out. Let me watch the numbers. Let me get it for you. There's so much initial jobless claims coming out. Let me try to blurt some of this out. I'm going to blurt out year over year. Okay, was 3.7 on the core. I'll try to get you core first. We'll have to dig in for the deflator, so we'll just go with core. Was 3.7. Is it going to be lower than 3.5? That's the big question. It's coming. It's coming. Initial jobless claims 218. That's a little high. That's good. You really want to pay attention to the 3 or 4 week average. I still don't have PCE. Was 3.7, expected to be 3.5. Wait for it. I still don't have it. What the hey? I'm going to have to refresh. Did it not come out? What? I don't have it. Does anybody have the number? It didn't come out. There it is. 3.5 as expected. 3.5 as expected. 3.5. So not bad. Not bad meaning bad, but mad meaning good. So get ready for some volatility. Okay, nobody got what they wanted. Okay, but I suppose not bad is good. Okay, 4 week average is 220 on initial jobless claims. We came out below average. So actually, that's disappointing. Okay, so core 3.5, headline 3.0. PCE headline year over year 3.0, core 3.5. Okay, income is lower. Okay, you got to remind yourself, are you a buyer of the dips or the seller of the rips? Look, the 200 EMA held her down. Okay. So now you got a fib inside of a fib. Are you going to do it? What you going to do? What you going to do? I got a pocket full of pips and my homeboys do too. All right. What do you stink? Santiago's thrown out kitty cat. Yeah, negative and by a lot, actually. Right? Negative 1.1. So I got to roll over there. I got to check on that. Hang on. That's why is harmony divine. Okay. Will that push us to a new higher high? Could be a rabbit, could be. Okay, what else we got going for kitty cat? Okay. CAD on long term, not overreacting. Let's put it on a very short term. It is weakening as expected. CAD Swissy. Okay. It's doing a role reversal on us. Okay. Okay, what else we got for kitty cat? Aussie cat, I don't know. It's too topish. It's not really trendy. Let me give it some more time. Mediocrity, huh? Okay, maybe the better one later today is going to be a EuroCAD. Assuming the stock market wants to rally today. What do you think about this one? Okay. What do you guys think about that one? Okay, could be a rabbit, could be. Let's take it to short-term indices. Let's take a look at them. I'll give it an extra little click. Okay. Swissy strong. Euro trying. Dollar thinking about it. Okay, cool. Let's look at some yen pairs. Okay. If you're thinking about being a bull, you should be watching this a bit early. And then if you're thinking about being a bear, you should do this. And I'm still in my scalp from like an hour ago. Okay, long on the left, short on the right. That's the idea. Very cool. Maybe check out kitty cat yen, maybe. Or dollar. Dollar holding up, huh? Cool. Let me back out. I want to see just a little bit more time. It's the perfect buying price. Ooh la la. The best buying price I have for December is right where we are now, 147.5. Okay. But that's bad because that means dollar strength. Oh no. Oh no. Yeah, that could be bad. Interesting. I don't know how I feel about that. I just really, yen weakness is better. So it'd be great if the US dollar was weak and the yen was weaker. I could live with that. I could live with that. Yeah, Richard, it's not a hedge play, really. It's an opportunity. I'm being opportunistic. I'm at levels where I expect price to fall, but I'm not a bear. But it could become bearish. So you could say it's a hedge, but I'm open-minded to either happening. Therefore, since I know how to trade, I know where all the bulls are and I know where all the bears are because I know how to trade. So I can, and if they know how to trade, then I know their rationale and reasoning and where they would do it. And I know my rationale and reasoning and I know where I would do it. So ultimately, if I know and I know they know and they know that they know, then it's all common knowledge. And I could just do both, jam the stop. One of them is probably going to work out. So is it really a hedge? Nah, it's opportunistic. That's all. That can happen at places that could be tops or bottoms of markets. And we are at those places now. What do you think? What do you think about, was that monthly pivot point important? Was that pivot point important? Right? Like, there's some, clearly pivot points are being used in the decision-making process of institutions, obviously. Let's go back to the dollar pairs. Actually, you know what? Let's do some commodities. Okay, S&P 500. What do you think? Remember, we talked about it yesterday that I want it to go up. I think everybody wants it to go up, and we need to stay above that price. And it did. Thank you very much. So we don't know, but it's acting as if. Okay, a 618 should get us between the 121.4 and the 1382. Cool. Nice. Here's Brent. There's your buy zone. It's nice when it's trending. Very nice. Very, 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 very nice. Remember, we've been watching this probably close to 2 weeks now of having it come down, stabilize, hit one of our, I think it was even just our first price, 172.50. Big up, big down, and therefore at that point I said be very open-minded to a change of trend. Then again and again and again, but now it's heading up. There you go. Is it a higher high yet? No, but it smells like it probably will be. And that's how you thread that narrative. Okay, remember, in the training course at investorbootcamp.com, we talk about day trading in the wicks. You got a low and a high, and you're a bull. So you anticipate from the top, okay? And somewhere in there is your buy. And that's where you use price action, pivot points, moving averages and stuff. But you don't buy the high, you buy the pullback, and it creates a wick. Then you go up and it makes money for the day and it closes high. It's bullish. Great. So you trade inside the wicks. Okay, we call that the Asia fade. So you buy the dip and it makes a new higher high. So you analyze again inside the wicks, from the top of this wick to the bottom of that wick, new higher high, and you're already planning out tomorrow's trade. Amateurs are just waking up. You're already planning tomorrow. So you're measuring the wick, the daily wick. So one way to do it is to say, let's mark these. Okay, there's a wick. That's the current high. That's the current low. Drop into a 15-minute chart. And you fib the candles now, or fib the range. And one strategy is that somewhere in here, you're trading today, and you will profit by the time you wake up tomorrow. Everyone else wakes up and looks for the trade. And they trade today. And that's where they fail. Cool. Now, there might be an easier way to do this. Yeah. So we could do this like, let's do daily pivot points. In fact, I want to do day trading bullish bias. Oh, look, there it is. Tomorrow's buy zone. Your trade plan is this for today. Okay? No lower low, new higher high. So you want to do things like I just showed you. Maybe do a Fibonacci, 50%, 33, 66. So somewhere in there you want to pa-chow. Okay? And then you can say, okay, where's today's low, today's high. Drop this down. You can look at about a 50%, a 33, a 66. And you're already Oscar Mike for tomorrow. Yep. Inside the wicks. Okay, the other way you do it is you go, let's do this. Another way you do it is higher high, higher low, higher high. Take the old high, drag it across. That's the new buy zone. Okay. Lower low, higher high. Right? Lower low, higher high. Okay, somewhere in here. New buy zone. Ma. That's called price action. John, do you have $88? Oh. Yeah, I can't help you otherwise, but I'm just showing you a fair trade, I believe. Investor. For $1 an hour, I can teach you everything I know. The thing is, my time is $500 an hour. So the only way I can do that to work for you for $1 an hour, I recorded everything. That's per year. And so I would teach you all of that. There's so much to teach you. It's endless amounts. There's a lot going on in this world. Yeah. Okay, so now I want the stock market to go up. This is what we've been waiting for. Okay. Hey, are you guys going to come to the party? Come on, come to the party. Who's coming to the party? Let's have a steak. Let's have a glass of wine or a cocktail like a Manhattan or an old fashioned. Come to the party. Come on, Favor. Nashville, Tennessee. Favor, you can get yourself a cowboy hat and some cowboy boots and a big buckle with an American Eagle on it. Yeah. And like fireworks behind it. Lucas, I really hope to see you there. That would really be great. It'll be nice. It's a nice dinner. It's a nice hotel. Yeah. Like I said, when you get there, it's nice and warm inside. Now, I mean, it's warm. You know, like what warm means. You still probably have to wear a sweater. It's cool. It's a big... If it's cold outside, it gets, it's like anything. Like in Georgia, in the summer, it's hot. But when you go to a restaurant, you freeze to death. So you have to dress up warm on a hot day to go eat at a restaurant. But you're not outside. It's not, it's not 20 degrees. So imagine just hanging out for an evening by a tropical waterfall. You can go on a little boat ride. There's a cool little town with cool little shopping. There's flowers everywhere. And then so you guys can have a really good time as a couple. And then when it's time for dinner, you come meet us and have cocktails and the dinner. And, we can hang that evening. I mean, it's really a good day. So to bring the wife it's really nice. Like I said, it's just like a Las Vegas casino without the gambling and the prostitutes. Yeah. It's really, truly killer. Like when you walk in, you're like, oh my God, Becky. It's cool, man. All right. Okay, gold doing its hesitation. We talked about, was it a scalp yesterday? I don't quite remember, but I see how my charts are drawn. We were here, higher high. Remember this? So I looked left, drag it across. This is our future buy. So there's your buy. And based on the information I had at that time, this was the target. So if you waited and got out at a 5A cross down, then you got the full Monty. Oh yeah, do you guys remember we scalped euro dollar? Do you guys remember that? We ended it. Was it yesterday? I think it was yesterday I ended it, where I talked for, an hour about selling it. Not selling it, but waiting to buy it. Was that it? Where was it? I don't remember where it was now. I think it was this one. I think it was right in there. We have to go to a 4-hour because I set it up on the 4-hour. Yeah, there it was. All right, so yesterday, we were right here. I'm going to try to mark it with my drawing tool here, okay? Yesterday, and I'll zoom in just so you can see, it was falling, but I was saying preferring my plan A was to be a buyer. I understand the down, but on the longer term, I was saying I prefer up, but I understand the vulnerability. So how do you still trade it? So we dropped into a 1 minute, and it was right at the end because somebody said, well, what if you want to scalp it? And we were here. We were right here. Ooh, okay. We were right here. Come on, I can't get any of the right colors today. There we go. We were right here, and I said long would be the scalp that I would do. And it went up for hours and then collapsed. Yeah. So then this retest and this retest, this is the 4-hour 21 bending, and then breach on the news, right? Yeah. Breach on the news. So if this continues off the PCE number, that means the stock market's going to come down today, probably. Was that the day trading group? No. I think it was Forex.Today. Because I don't scalp in the day trading. And the second part of it is I believe it was right at the US Open, which is the time to place a scalp like that. Anyways. Yeah, not a lot of scalping at 4 in the afternoon, right? So it had to be, right, it had to be this one. Yeah. Look how it went right up to 109.50 and failed. So now you got to watch the 109. Those are our lines in the sand. I would stink. We're on the central pivot, okay, which makes sense for the counter trend. If we go out to the hour, sorry, I'm doing too many clicks. I apologize. When you hit this target in that time frame, it suggests price comes back to this level, and that's where we are now. What we don't know is, will it do this? It can, and if it does, this market is still bullish. Maybe not moving average-wise, but on a higher time frame, it would still be bullish. So we go out to a daily, for example, and what I just showed you is this. And this is where intraday and day traders get lost, where this comes up, then it falls for 5 or 6 days straight, which is forever if you're intraday trading and scalping, and you miss the fact that it's just a pullback to the 21. That's all it is. Okay? That's all it is. So if you're going to try to, if there's like a couple of possibilities here. Let me explain it now that we're on this time frame. Let's talk about the rest of the month of December. Okay. If we're going to have a bullish open, a hot open, okay, our current prices are for the market to recover by the end of the week, and next week is a bullish week. And then the week after will be bullish, and then we'll get to the Fed meeting, which is 13 days from now, 12 days from now. So 12 days, so let's say we stabilize today, we don't make a lower low, so we're going to stabilize now. And then we're going to have an up Friday, up next week, up the next week. We're going to get to 112. The Fed meeting comes out, and there's massive profit taking. And we end December down here. And it drops from 112 to, let's say, 106. I'll say 106. Could be 105. 2 weeks up, 2 weeks down. The thing is, you take the stairs up and the elevator down. Or worse, fall off the top of the building. It's a lot quicker to head down. It's an avalanche. Quite literally, stops, hitting, stops, hitting, stops, hitting, stops, hitting, stops, accelerating as it falls. Nobody wants to get long at the end of the year. So they're more likely to book profit at the end of the year. What do you stink? Smell like a plan? Cool. Hey, can I ask you, can you click the thumbs up button? Just, again, it's for YouTube, not my ego. It's just for YouTube. It's so hard to get YouTube, right? So, and just whatever we can do for the YouTuber, the YouTube thing, the algo. But let me know how I can help. It's going to be an important trading day. What time is it? 9 o'clock? It's going to be an important trading day. Thank you, by the way. What would you like? How can I help? Do you want to look at QuantBox quickly? Just see the setup going into the open? We can do that. I don't mind sharing from time to time. And for those that used to be a retail subscriber, just so you know, I gave every retail subscriber access to the professional database. I upgraded every single retail trader for free, without warning. I just did it. So if you think you're a retail trader, no, you're actually a professional subscriber now. So you might want to check that out. Because the retail database will still work. The thing is, you now have access to Pro. And there was something like, 11 upgrades? Well, you got them all for free. Thank you for being a subscriber. Yeah, don't have to do anything. I just gave them to you. So anywho, we got oil on the move, yields falling, which is great. But the markets are still not quite open. It's still very neutral. Just slightly leaning risk off, but that could change in a heartbeat. Okay. You still have oil as the outlier. Okay. And that's obviously because of the OPEC meeting, obviously. And we already knew that. Like, that's not new news. We'll get rid of the commodities. And the scatter plot's waking up a little bit because earlier this morning, a couple of hours ago, I met with the quant boxers and it was this. But notice that we have a lot more up and bullish and expected than we had a couple of hours ago. So since the news. So what I can do is indices only, if it's going to let me. There we go. And it seems like most of the markets are up. Okay. Dow is up. NASDAQ is up. DAX is up. Nikkei is up. FTSE is up. And we're waiting for SPX. Yeah. Interesting. Maybe they're going to wake up. So FTSE is obviously already open. DAX is already open. So you have like Germany up 0.5%. And the UK up 1% already. Very cool. Nazi's trying to wake up early on that news. Very cool. Okay. Okay. Bitcoin's just turning slightly bullish. It's got a 3. Okay, it's got a 3. It ain't bad. Okay, euro dollar's got a 3. Look at the beautiful seasonality. Lovely. Love it. Right now, retail sentiment extremely long CAD Swissy. Retail. Okay. And institutions are heavily long the Japanese yen. Do-do. Do-do-do-do-do. Where's that CAD Swissy? Look at this. Retail traders are heavily long. Oh, retail's heavily long. Oh, it's like watching a car accident, right? Oh, they're long. Why? Why are they long? Yeah, picking bottoms is a strategy that always stinks. So anyways, that's what I got going there. Oh my God, though, hon. Do you feel bad for those retail traders? Oh my God. They're long. Can you imagine that? Gee whiz, terrible. Can I just trade on seasonality? Well, you need to combine technical analysis with it, but absolutely. Because you're trading what normally happens, so you're waiting for that normality to appear, and you confirm it with technical analysis. Yeah. And the interesting thing is seasonality is based on fundamentals. It's not based on technicals, right? So there's a normal ebb and flow of capital. So you're trading normal flow of capital. And so as a technician now, you would confirm the seasonality. So this year, the seasonality came late, but it showed up November 1st. I thought it would have been the end of September to mid-October. But we know that the Hamas attack on Israel delayed things. So it happened a few weeks later once we realized, well, on a global economic scale, it's no big deal. So therefore, we went back, risk on. So it was delayed this year, but you could use technical analysis to confirm or deny that. So like, let me do this. I'll take you to, I mean, there's two ways of looking at it. One way is like this. I created this page, and so it tells you when to buy and sell the US dollar. Okay, so you see, okay, you see, this is where we are now. Yeah. So could you be ready, willing, and able for those normal moves, those regular normal moves? Yeah. Well, that's why it's there. It helps you analyze when to take profit. But now QuantBox breaks it down to the week, so you even know which week is a bullish week versus a bearish week. So you can get ready and be prepared. Now, obviously, when you look at an average never happens. There is no average. Okay. But you can still see where normally you get peaks. Okay. So there's some profit taking and some reaccumulation. But I do plan my year based on seasonality. Yeah, I do. And this is the shape of the Dow. And all you have to do is an up year is going to look like that, but sloped up. A flat year is going to look like that, but sloped sideways. A down year is going to look like that, but sloped down. Cool, right? So there's the accumulation of all the long and short orders. So you can see that this market trends up throughout the year. But there's the normal contraction, expansion, contraction, expansion. Yeah, is that helpful to know ahead of time? I plan my vacations around this stuff. Yeah. But you know, that's $79 a month. No! Yeah, $79 a month. Well, you didn't have to build it. Let's go back to the yens, and I think I want to bail. I want to roll, but let's look at the yens. We were comparing and contrasting. Yep, there's that euro, the euro up. Okay. Cool. Nice. So my scalp is out at break even. Okay. There's my short from earlier. So short off the top. And remember, and I'm going to leave you with this thought. I said, if there are bulls, they live here and they live here. So could this potentially be a big up? Heck yeah, but it isn't yet. But the thing is, I knew that a couple of days ago that that's where the bulls were. It's kind of helpful, huh? Now we could drop all the way down to 185, but that poses new problems. So right now, everything is right as rain. I would say this is still a trend trade. And that's because you go out to a daily. And all we did was tickle the daily 21, and we're long and strong. And according to that theory, we are going to 192 soon. Like not in the next 5 weeks, in the next 2 weeks. Oh, well, that's good to know.